U.S.-China trade relations tensions are flaring up again after China imposed even tighter export controls on rare earth minerals. The Trump administration saying it will set price floors across a range of industries to combat market manipulation by China. Last week, the president announced an additional 100% tariff on Chinese goods by November 1st, and he is threatening to block Chinese cooking oil imports after Beijing halted purchases of American soybeans. The president posted he is considering terminating business with China. Joining me now is U.S. Trade Representative Jamieson Greer. Great to see you, Jamieson. Thank you so much for being here. I know that the president is expected to meet Xi Jinping later this month at the APEC summit on October 31st, right before that November 1st deadline. Are we prepared to decouple from China today?
It doesn't have to be that way, Maria. It sounds like the direction China is going. They're the ones that are taking actions to look like they want to decouple from the rest of the world. They're trying to control the supply chains of the entire world, not just the United States. There's obviously a lot of room to have a trading relationship with China that finds a way to be constructive between us. But if China keeps taking the types of actions, or if they actually implement what they've threatened to implement, they, in effect, will be decoupling.
Well, it's interesting because they're taking this hard stance at a time that there are plenty of questions about the Chinese economy. How would you assess the Chinese economy today?
Well, their youth unemployment is quite high. It's over 20%.
Wow.
For growth, they've outlasted the possibility of having real estate growth or infrastructure growth, so they're really focused on just exporting, and they have enormous amounts of overcapacity in manufacturing. They can't flood the U.S. market anymore because President Trump has put tariffs in place, and so they're starting to find other markets to push their things. So their economy has some structural challenges.
Structural challenges, but is it growing the way that they say it's growing, 4 and 5%?
Well, I'm always skeptical of economic data coming out of China. Over the past several years, they've tightened down on the types of statistics they'll even issue. So I don't really take those at full face value. I think the reality is they're having significant challenges in the Chinese economy. And listen, President Trump has said he wants China to do well. He wants America to do well. This is not about trying to bring China down at all. It's just about defending American interests.
And yet, China controls nearly 70% of the global rare earth supply. I guess the refining part of it, raising questions about the leverage that we have here. What's the leverage of the United States, and how long will it take to wean ourselves off of that dependence on the refining of these rare earth minerals?
Well, with respect to your latter point on rare earth minerals, I think you know that the United States made an equity investment into the Mountain Pass mine several weeks ago. The president recently signed an order to have a road built out to Ambler Road, which is an area in Alaska where there are critical minerals. We have taken a stake in a specialty metals company. I think there are more things coming down the road. So I think the Chinese actions have really galvanized not only the government, but even private industry in the United States. You saw J.P. Morgan earlier this week announced a $1.5 trillion fund to invest in manufacturing in the U.S. for critical sectors. So, the U.S., both private and public, I think is on their way to really diversifying and de-risking from that leverage situation.
And how long do you expect that to take? We've talked in the past about how you and your colleagues and the president has been really monetizing the U.S.'s balance sheet by doing what you just said, taking stakes in various companies. I understand taking a stake in Mountain Pass to get that refining expertise. Walk us through the president's thinking on this monetizing of the balance sheet.
Well, when you take a look at how the United States has approached its industrial production over the past 30 years, it's really just allowed, globalization to determine, where capital and production is happening. And on net, it means it's been happening in China, Southeast Asia, and Mexico to some degree. And so the president, he understands that we are way overdue for a course correction. And so, he's taking what, frankly, is a light touch on the economy because we want market mechanisms to work as much as possible. But imposing tariffs to protect domestic production here, putting, the imprimatur of the U.S. government on important companies and sectors, making sure that the world knows and companies know that the United States is going to stand behind those critical sectors.
Mm-hmm. Right. So will there be more stakes in public companies in that regard, in rare earth related companies?
I mean, it's possible. The main thing we're looking for is to have our own ability to obtain rare earths. That's what we're looking for. And ideally, if you have a private company that's able to do it, if you need some public support or help to move it along, then we'll do that. The reality is we just want the outcomes.
And it's not necessarily just the rare earth minerals, but it's the refining of that, right? Someone said the other day on the program that rare earths actually are not so rare. They are all over the world, but it's the refining of it that Beijing has been able to master and dominate.
That's exactly right. These minerals, they're all over the place. We have deposits here. There are deposits in Canada, Argentina, all over. But then there's a processing part, there's a refining part, there's the part where you make magnets. And we want to be able to reshore as much of that as possible. This is obviously a global issue. The Chinese are hitting the whole world, and so our partners and allies are also looking at doing this, and they're taking their own steps, and we're trying to align with them to make sure we have, I would say, a common independence from that kind of leverage that China's trying to exercise.
But the hits keep on coming. The U.S. and China rolling out new port fees on shipping vessels. Beijing imposing sanctions on 5 U.S.-linked units of South Korean shipbuilder Hanwha Ocean. Jamieson, are you worried that this aggression is spiking to the extent that it will, in fact, roil markets and impact economic growth, as Stephen Myron is worried at the Fed?
I would say on the shipbuilding, for example, this is something that has been in the works for many, many months. Back in April, the U.S. Sent a very clear signal, released notices, and gave a lot of details on how it was going to do this. Again, we're trying to carve out a situation where U.S. shipbuilding can have a renaissance. We have the Koreans who have invested in the Philly shipyard. We have a couple of orders for LNG carriers there. China, over the past couple of decades, has really distorted the global market for shipping, so it makes it hard for a country like the U.S. or other countries to have a share. We also impose port fees on roll-on, roll-off vehicles from all countries, so it's not just China-specific. And we've heard from the major carriers that they're actually not going to increase their fees to customers because of the port fees. So this is something where we've tried to thread a needle. The Chinese, again, are overreacting like they've done before. But I think at least on the U.S. side, there's been a lot of effort to craft this remedy in a way that promotes shipbuilding but also ensures we can export.
And of course, President Trump keeps getting pushback from federal judges. I mean, the president says he may attend the Supreme Court arguments for the major tariff case on November 5th, calling it one of the most important in the nation's history. Jamieson, what is the backup plan in the administration for tariff revenue should the Supreme Court go against President Trump?
Well, I will say that the first plan is to win the case. We feel very confident about it. It's very important that we win. It'd be disastrous if we didn't, and it would undermine the president's policies. Of course, there's the revenue that would have to be dealt with. Our own view, and our plan is that tariffs are going to be part of the policy landscape. We will review and implement tools that are appropriate, but of course, the tool that's being used right now, the IEEPA Emergency Powers Act, that is the appropriate tool. The president's using it correctly. He's using it right now not only to impose tariffs, but also to make deals with countries that are willing to go along and help the United States get its massive deficit under control. That's why it's imposed, and that's why we're doing it. And the president is using the statute exactly how it was intended to be used.
You also have upcoming on November 17th, the U.S. Trade Representative public hearing on USMCA. You've put Canada and Mexico on their own bilateral tracks. Can you tell us a little about the framework for what you're expecting for USMCA and specifically trade with Canada?
Certainly. So the U.S.-Canada-Mexico trading relationship is enormous. There's a lot of cross-border trade. There's auto trade. There's energy trade. There's agricultural trade, other manufacturing, services trade. So it's a quite important economic relationship. And the United States, of course, as the largest economy among the three by far, we should make sure that the agreement continues to benefit the United States proportionally.
Yeah.
With respect to Canada,
Yep.
We had Prime Minister Carney here last week, and we're developing a great relationship with them with the new leadership there.
So what will the tariffs look like for Canada?
So we'll see. Right now, there's a 35% tariff on Canada for goods that don't comply with USMCA rules. And importantly, there are stronger tariffs on steel, aluminum, and vehicles from Canada, lumber, copper, some other things as well. We want to make sure that we control our trade deficit with Canada, that we promote U.S. production here, we have a great relationship with Canada. We have for decades and decades, but ultimately we have to put America first in this relationship. If that means that we have tariffs, then we'll have tariffs. But I think that there are ways to cooperate with Canadians on things that are of mutual interest to us both.
What do you want to say to corporate America out there who is worried about the impact of stacking tariffs, where they, finally got some clarity in terms of what the tariffs look like, but then we see more tariffs and they're stacking on top? One apparel company I spoke with yesterday said, look, it's basically doubled our cost, and it is going to impact growth. So what do you want to say in terms of the stacking of these tariffs?
Well, first of all, the whole point of the president's program is to make sure that we have more tariff protection for our domestic producers so that we can get our trade deficit down. So if you just impose a bunch of tariffs and they don't actually increase the overall tariff, then what's the point of the program? Now, that being said, there are separate programs where there are certain sectors, whether it's pharmaceuticals or autos or steel. Those don't stack. The White House has been quite clear and put out documentation to that effect that there are the so-called reciprocal tariffs where it's a flat tariff on a country, and then there are sectoral tariffs, and those don't stack. You either get one regime or the other. We understand that a lot of companies who have based their entire supply chain on importing things are going to be unhappy with that, but that's part of the reason why we're in this problem, that we have to get it under control.
With regard to Canada, one analyst this morning is talking to clients about foreign direct investments, and I wonder what that means or how that plays out in terms of energy and defense and perhaps the purchase of F-35s. What is the president looking to do in terms of foreign direct investment from these countries into America?
Well, we welcome it, especially for greenfield investment, right? We're not that interested in countries coming and taking over U.S. companies for their own. But we welcome the investment, especially where it's greenfield, and we have folks coming in, building new manufacturing hubs, helping build out the AI infrastructure. And if we have foreign investments that's going to support existing businesses, that we're happy to have that too. This is a hallmark of the president's presidency. He talks about having trillions and trillions and trillions of dollars in foreign investment, and we want that investment as long as it benefits the U.S. economy, helps U.S. workers, and increases wages.
And one analyst, Chris Kruger from Cowen, is saying that the pipeline is back on the table. The energy space, a revival of the Keystone XL pipeline, Alberta to Texas, is back on the menu, which was canceled, of course, by President Biden. What can you tell us there, as well as another pipeline in Alberta to the West Coast?
Right. Well, these are matters for the Canadians, of course, but their new government under Prime Minister Carney is much more centrist, much more interested in exploiting their energy resources. They have talked about the Keystone Pipeline. Obviously, any kind of deal or arrangement with the Canadians, it's not just about Keystone or the pipelines, but those could be an important component. But I think that if we're going to have an improved trade relationship with the Canadians, it needs to cover a lot of other things: agricultural market access, services market access, et cetera.
As President Trump likes to say, he's bringing wealth back to America. Jamieson Greer, great to have you this morning. Thank you so much.
Thank you.
U.S. Trade Representative Jamieson Greer at the White House.